Hi everyone, welcome to another Weekly Forex Forecast for the week ending July 24th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the Euro USD, the Pound USD, the Euro versus the Pound, as well as the Euro versus the Canadian Dollar. And we're going to wrap things up with VETUSD. That's VeChain, which is a cryptocurrency I've been talking about for a few weeks now. I'm going to give you an update on that one after the pair's 100% rally over the last few weeks. Alright, so let's get to it right now. Quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. As always, we're going to talk about the Euro first, and as you can see, the Euro USD had a nice gain last week after it respected that 114.20 resistance level. So we've been talking about this now for a few weeks, where we had this rally back here. We then had consolidation that took on the form of a descending channel, also known as a bull flag. So a bull flag like this often acts as a continuation pattern, and given that we had the rally before that, this always looked like a bullish continuation pattern, where we had a breakout on this candle, the pair retested that area as new support, and then moved higher. We got the break above 113.50, which is another level I pointed out last weekend, and even the weekend before, and that led us to 114.20, which is the inception point of this channel. Now, notice how Wednesday's session did sell off from that area. However, in the members only video, I mentioned how this was actually a weak sell signal in the sense that notice where Wednesday actually closed. All right, so if I draw a level right at the top of Tuesday's high, notice how Wednesday actually closed just above that high. So the fact that Wednesday's session didn't even close inside of Tuesday's range hinted at the fact that there was still strength here. If this was a true bearish pin bar, you would have seen a close down here to indicate that the pair couldn't even close above Tuesday's high, but instead we got the opposite. All right, so now Thursday's session did sell off, so we had this move higher, and then we had a sell off, and a lot of people were probably selling the Euro USD through here thinking that this was the time that the Euro USD was just going to plummet. And instead, it held relatively well on Thursday, and then Friday we got this rally, which closed Euro USD marginally above 114.20. Okay, so 114.20 is obviously the inception point of this channel back here. And you can see where, again, it acted as resistance on Wednesday and Thursday. Now, we'll have to wait and see if Friday's close above 114.20 will hold as support. I'm thinking that this is too marginal for me to say that 114.20 is now support. So I'm going to keep my support level down here at 113.50. However, just given this sideways movement right here, this does look like the Euro USD is gearing up for a run at 115. So 115 is another level that I've talked about now for weeks. And as long as the Euro USD stays above 113.50, I do like the idea of a move up into 115 and even 116. So I remain long here from about the 113 area. All right, so right down here. And my target remains 116, which I mentioned last week. So this is the multi-year wedge pattern. And notice where the top of this wedge comes in, right around 116. Furthermore, 116 is a key horizontal level based on these highs back here. And again, we're looking at the monthly time frame here. So we've got these two highs back here. 116 then became support through this area, and then resistance once again. So 116 is going to be a confluence of resistance, and that's why 116 is my target. So that'll be the case as long as the Euro stays above 113.50 on a daily closing basis. So the pound against the US dollar still continues to trend sideways. We really haven't seen much movement here at all. And this is something that I talked about last weekend, where 125.30 is support. All right, so notice back here, it served as support back here. It then served as resistance. And ever since closing back above it, 125.30 has been support. Now, all of this through here, though, is really just consolidation. There's really no momentum here, and this is something I've talked about several times, where we need to see some type of breakout, just like we've had from the Euro USD, so we can get some kind of trend going. And in my opinion, that could come following a break above this trend line. So this trend line back here extends from the 2019 highs, and it's going to take a close above this trend line in order for the pound to regain its momentum. It's also going to take a break above that trend line to expose this high back here right around the 128 area. All right, so 128 would be in focus if we get above this trend line, and perhaps even the 130 handle, which would be the top of this ascending channel based on these highs back here and these two lows. All right, so right now the pound is unfavorable in my opinion because we just have this sideways movement and there's absolutely no momentum here. Now, alternatively, if we do see a close back below 125.30, that could expose the bottom of this channel, and subsequently a break below that channel could start to expose some of these lower levels like 122 and 120. But really, until we see either a break above this trend line or below this channel support, there isn't a whole lot to do here. However, I do think that a breakout from one of those two levels would allow the pound to regain some of its lost momentum and could provide a favorable opportunity. So I spoke about the euro versus the pound last week, and we talked about this false break below this long-standing trend line. So you can see this trend line down here is relatively well defined, and we had a break below on this candle and even traded below this area for several days. However, last week did rally and close back above that area. Now, one thing I said last week was that 90.50 was new support. So as long as 90.50 was intact as support, I like the idea of at least another retest of the top of this channel right around 91.10. So if I zoom in, you can see where the euro pound actually caught a bid right at that level. So we had this close back inside this wedge pattern, and then that 90.50 area became support on several candles. Furthermore, we did have a retest of 91.10 as anticipated, but based on this level, the euro pound failed to close the day above it. All right, so as of right now, this pair is still in consolidation. So like I said last week, we need at least a daily close above that 9100, perhaps 9110 area in order to expose 9150 with a close above this level. All right, notice how it was resistance back here and then support and resistance again. It was also resistance through here. So until we get a close above the 9100 area and also the 9150 area, we will likely continue to see indecision from the euro pound. However, if it does get above this 9100 to 9150 area, look for a move up into 93. Alternatively, if we see a close below this wedge pattern, that would start to negate this entire idea, and I would probably go ahead and just remove this trend line altogether, because anytime we get a false break like this and then a close back inside it followed by a close back below it, we just start to get a lot of choppy price action through here, and it tells me that the market is not respecting this level the way that I would like to see. So that 90.70 area is going to be support for the week ahead, but again, we need to close above 9100 and especially 9150 in order for the euro pound to move higher. The euro versus the Canadian dollar played out beautifully for us last week. So if you saw that video, I mentioned this pair when it was trading right on this candle. So this was the Friday close before last weekend's video, and I mentioned how we had this wedge pattern forming. Even though the pair has been incredibly indecisive and choppy, this wedge pattern could provide an opportunity, where I said that a close above either the top of this channel or the bottom of this channel could present an opportunity. And of course, on Monday, we had a close above that area and even retested that target at 155.30. So notice how that's the inception point of this wedge pattern. So 155.30 was the target following this breakout that I mentioned last week. And you can see where the EURCAD found sellers right in that area. And furthermore, you can also see where we retested the top of that wedge pattern as new support. So additional resistance levels are a bit difficult to identify here. If I move out to the weekly time frame, you can see where we possibly have a level up here based on this weekly high back through this area. All right, so notice how this weekly high here found resistance. The next week did as well. And then there's a bit of a pivot through here on the weekly time frame. So somewhere right around 159 could be the next level that gets exposed if the EURCAD can break above 155.30. All right, so this is how that would look on the daily time frame. So right now we need a daily close above this 155.30 area, which again could start to expose higher levels, including perhaps the 159 area. However, just like I mentioned last week, there is a channel here where if I use some of these swing lows as the bottom of the channel and extend the wedge resistance from these two highs back here. All right, so we've got all these lows through here and then these two swing highs. You can see where the top of this channel could serve as resistance over the coming days. So even if we consolidate here for a few more days, break above 155.30 on a daily closing basis, the top of this channel is going to be one to pay attention to because it could come in before that 159 area. All right, so if the EURCAD stays constructive this week and does close above 155.30, keep an eye on the top of this channel. Alternatively, if we start to break down below this confluence of support, that could signal weakness and it could also expose the 150 handle. So I think there's an opportunity here either way, whether the EURCAD comes down and breaks below this confluence of support or if it breaks above 155.30. The key here is to stay patient. All right, so this was the trade last week. It played out beautifully for a move up into 155.30, but the market is telling us that that next move needs a little more time to materialize. And last but not least, we have VETUSD. This is VeChain, a cryptocurrency I've talked about a couple times on the blog. And it just so happens that the last blog post I made, the pair was trading at 0.0088. All right, so it was trading below a penny down in this area. So this is the 4-hour wedge I mentioned back then. And you can see how after a couple of weeks of consolidating into this terminal pattern, VeChain really got squeezed here. And that triggered a 150% rally. All right, so I wrote the blog post back here. You can see where we had this breakout above wedge resistance, and that led VeChain on a 150% rally. Now, I'm not going to go into the fundamentals of VeChain. You can see my other posts for that. Today, I just want to talk about the technicals, and I want to point out two things that are happening right now. And the first one is on the weekly and monthly timeframes. So if we move out here to the weekly, you can see where we have this massive breakout above this resistance area. So this area just above a penny has capped VeChain for years. Okay, so we've had a lot of consolidation down in this area. Of course, this back here was the March sell-off where just about everything sold off. And since that time, we've just had this massive bounce back here. Now, what I like about this breakout is if I move to the monthly time frame, you can really get a sense of what's happening. Where we're halfway through July, and you can see where volume is really starting to come into this one. So on this breakout, notice how we have this ramp in volume. All right, so this month is halfway finished and the volume is already higher than all of June. That's a really good sign to see because when you see a candle like this on the monthly time frame, breaking out of this multi-year consolidation, you want to see huge volume, and we're certainly getting that now. And the reason I'm using volume here, I've explained this before, but it's because Binance does a lot of the volume here in the cryptocurrency market. So unlike Forex, where it's very much decentralized, a lot of the volume goes through Binance and this VET Tether pair. Okay, so that's why I'm using this because it can be a great indicator of what's happening. So we have this breakout from a multi-year consolidation on strong volume. Now, if I move into the daily time frame, you can see where, speaking of volume, notice what's happened ever since the pair closed above 0.017. So we closed above that area on this candle. It was resistance back here, and the 2-cent area, so 0.02, is serving as resistance. But notice how the pair is also held above 0.017 on a daily closing basis. All right, notice through here, and even just last week, 0.017 again served as support. But what I want to point out here is notice what's happening with the volume. As the pair consolidates, volume is decreasing. And this is what we want to see. All right, decreasing volume as we get consolidation. So notice back here, we had this wedge pattern. So this was consolidation. And the volume during this time started to trail off. Then when we had this breakout, look what happened with the volume. We had this huge spike, this ramp in volume. So right now, the same thing is happening. where we're getting this consolidation, and whether or not this forms a wedge pattern, I'm not sure. But right now we just have this sideways consolidation, and during this time, volume is trailing off. So what we want to look for is an eventual spike above that 2 cent mark with a daily close above it on strong volume. All right, so we want to see volume start to ramp just like it did back here. So if we get that, 0.028 is going to be the next resistance level. And that may not look like much, but from today's price, that's a 50% move. Now, to be clear, as I've mentioned before, VeChain is a long-term investment for me for the next 2+ years. So this is a fundamental play for me. I'm not going to go into all the reasons why. Again, I've written about that before, but just know that I will not be taking profit at 0.028. All right, I have not sold any VeChain, and I don't plan to for the next few years. But in the short term, I do think that a daily close above this 2 cent mark on strong volume. All right, so if we get a volume spike and volume starts to ramp again on a close above this area, look for a push up into 0.028. Now, this is all contingent too on 0.017 staying intact as support on a daily closing basis. If we see the pair close below 0.017, that could send us lower to test some of these recent lows down here. But even then, I wouldn't sell out. Know too that I've also been buying VeChain below a penny. So I was buying VeChain during this entire period back here. And again, I haven't sold anything, and I don't plan to for a very long time. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.